Hi, good afternoon and welcome. You're watching MF Corner. I am Sumaira Abidi. So on the show today, we are going to be answering queries which have been sent in by our viewers, and we have two guests joining in. Anubhav Srivastav, Partner and Senior Fund Manager at Infinity Alternatives, and Shweta Rajani, Senior VP and Head of Mutual Funds at Anand Rathi Wealth. So good afternoon to both of you, and we have quite a few questions in fact coming in. A lot of people have been commenting, saying that the SEBI order which came in for Franklin Templeton, right? Now a lot of people want to know is there cause to sort of exit their equity schemes too? So Shweta, what is the house view on, what does it mean for an investor? There is some amount of trust deficit. They have been slapped with a heavy penalty to claw back their advisory fee of the last 2 years. Should investors be worried?
Sure, Sumaira. So a very valid question given the SEBI order of paying a penalty of around 500 crores on the investment advisory fee that's been raised. But my answer to the question would be that you should continue with your equity investments. And the comfort that I draw would be based on 4 or 5 reasons. So one is the SEBI order is very clear. It's talking about the debt investments. It has got nothing to do with equity investments of Franklin. Second, the equity investments today are made pretty much in line with the SEBI guidelines. So for example, a large cap fund would invest at least 80% of their money in the top 100 companies. So these are fairly liquid companies and would not face liquidity stress like one witnessed in the debt funds of Franklin, for example. Second, if you see, Franklin is not facing a redemption pressure. So just to give certain numbers, in the month of May, their blue chip fund, which is a 5,500 crores fund, would have received a net outflow of 10 crores. If you look at the industry numbers, the industry would have received 960 crores of net flows on their large cap funds on a base of 190,000 crores. So right now, the flows of Franklin are pretty much in line with the industry trend. Third, if you look at the performance of their schemes, if you look at the market cap specific schemes of large and mid flexi cap categories, at least 4 out of these 6 funds in this calendar year have been top quartile, and a couple of them are ranking as first or second in terms of return. Lastly, if you look at the fund management team of Franklin, has been a fairly stable team. It's a team based out of Chennai, headed by Anand Radhakrishnan, who's been managing their equity funds for the last 16 years. The entire team comprises of 7 fund managers, not a single fund manager exit during this entire turmoil of the last 1 year, supported by 11 analysts on the equity side. So fairly big and a stable team. The overall fund house, if you see, it's the 11th largest fund house managing equity assets of 45,000 crores of profit-making AMC. So if you look at all these facts, unlikely that their equity schemes would be, would go in for a wind-up. And given the performance of the schemes, one should not, at this point of time, worry and exit and panic. Continue with your investments. Closely watch the fund flows, the fund management team, and where it goes in terms of now the court, now the ruling. Franklin has gone into SAT, appealing against the order. So let's watch that situation.
Okay, so for now, no worries on their equity side. Devender Singh, another query that has come in from YouTube says, which will be the best instruments to invest in when a person is near retirement? So we had one query of somebody who was planning, 26 years ahead. Now here's another person who says he's close to retirement, so wants to know what are the best debt instruments when the person is near retirement, and the key concerns being safety and inflation beating returns for regular expenses. Shweta?
Yes, Sumaira. So yes, for somebody closer to retirement, looking at less risky investments, focusing on regular inflows. Options on the debt side. You have your, the traditional fixed deposits. You'll have RBI bonds, debt funds, corporate bonds, primarily available to you. Given these various options now, a fixed deposit or a corporate bond or an RBI bond are not so tax efficient. So if you are in a higher tax bracket, let's say you're in the 30% tax bracket, even if you're getting a 7% interest rate pre-tax, post-tax, you'd end up with less than 5% of income. The debt fund, on the other hand, gets a tax benefit. So if you stay put for 3 years, your taxation would be 20% post-indexation. So if you're getting a 6% pre-tax, let's say, on a high-quality debt fund, you will end up getting, around 5.2, 5.3% post-tax. So there's an advantage of a debt fund over these above instruments. Second factor is liquidity, because you are talking about retirement. So if you want anytime liquidity, then again debt funds score over the other options, because other either are illiquid or they have penalties or lock-in periods. From a regular inflow standpoint, again debt funds give you that flexibility by choosing a systematic withdrawal plan. You can decide how much money you want, what frequency, which the other options would not give you that option. Secondly, they don't have exit loads. A couple of them don't have exit loads. So given the various options, a debt fund would be the ideal investment option from this standpoint. If you, because you said you're needing retirement, so let's say you would need some cash flow in less than a year, then within the debt fund space, you can go in for low duration funds or ultra short term funds. And if you have a horizon which could be around 2-3 years, then you can go in for funds like dynamic bond funds, medium duration funds.
Okay, so that's we've got two sets of views now on retirement. One is a more long-term and aggressive view. One is of somebody who's looking to retire and therefore a more conservative approach. We have a similar query, in fact, again from Twitter, where Bhupesh Gupta says he had invested in Sahara Group through the cooperative society route, but now he's not able to withdraw even after maturity because they're saying that the money is stuck. Can you help me in identifying the issue? Shweta?
Yes, Sumaira. So, just to give you a context, Bhupesh, on the Sahara Group, the issue with Sahara Group goes back to 2010-11, when they had raised, when they had actually issued non-convertible debentures to over 2 crore investors worth 25,000 crores. This was done without taking the necessary approvals from SEBI. So Supreme Court at that point of time had issued a directive to refund this money back. And when they went on to refund the money back, only 4,600 investors came forward claiming the money. This raised a lot of suspicion on money laundering and embezzlement of funds by the Sahara Group. It didn't end there. In 2012, they floated 3 cooperative societies, apart from the one which was already there, and started raising a lot of funds. In fact, crores of money of depositors was raised through the FD route. And this money, again, there have been concerns on the utilization of this funds, investment of these funds. The data shows that a lot of this money, which was raised, has gone into the Ambi Valley project. It's a real estate project around Mumbai. So the registrar has been probing this process, the case of where the monies are being utilized. In fact, few months back, the registrar had asked these cooperative societies to share the details of their assets and liabilities and come up with a credible plan of by when will the money be paid out. But the response from Sahara so far has been that we've paid out 3,000 crores, and as and when we are able to liquidate the residual assets, we will pay back. So unfortunately, neither the court, the registrar, or Sahara has put in a specific timeline on when the monies would be paid. But it's being monitored by registrar. Unfortunately, I can't give you a timeline of when you can get your monies back.
Okay. In fact, I guess that would be the putting the ball in the court's case, the Supreme Court's court, for the court to actually give a timeline. Okay. Got it. Anubhav, Shweta, thank you very much for doing the honors today. And in fact, I know that a lot of people are watching and they're constantly tweeting us questions that they would like to ask, but unfortunately we're out of time. But I do promise to take up all of these queries in the coming week. Thank you very much for watching, and do stay tuned in. The team of Closing Bell joins you next.